Good stuff, good stuff, good stuff. Well, welcome guys to, our first annual or first will be monthly now home buying seminar. We typically do this at my office or at Frantzky's office. And due to the quarantine and COVID-19, we decided to still get this wonderful information out to you via webinar now in the comfort of your own home. So you all is in your PJs, your bonnets, your do-rags, man. We're able to still get this information out to you from the comfort of our own home. It's going to be game-changing, and we would definitely do this here and forward.
Next time, let your friends know, to tell all the good information that we gave y'all. So for that next one.
I'm going to turn this volume up a little bit too. All right, so we're going to go ahead and get started. What we will be covering really today is, the home buying process, how to get qualified, the different financing options, how to prepare for home ownership, different saving strategies and things that I use personally with myself and my wife and family members, to save different things. What's the local market doing right now? What exactly is escrow, the closing process, and much, much more. So let's go ahead and get started. Just a couple of quick housekeeping rules. Make sure you have a pen and paper, or however you take notes. If you do it online, Google Sheets, anything of that sort, just take some notes. All for the purposes of this call, we will be all parties will be muted until the end. If a question should arise, just type it in the question and answer section below. If you don't have a question and answer section, just let me know, and me or Frantzky will be able to better serve you. Or write it on a piece of paper and just ask it at the end. At the end, we will unmute people one by one, so everybody won't be talking at the same time if any of our questions wasn't answered. Now, you must stay until the very end of this call to get in a drawing for the $100 gift card. We're probably going to do a Amazon gift card because everything's there. They're probably like the only people that's really open and thriving right now. So it'll probably be a $100 Amazon gift card. Let you get whatever you want. Now, without further ado, let's go ahead and get started. Let's have some fun, man.
All right, let's go.
All right, y'all ready? Some thumbs up if y'all ready. Say thumbs up or just type in ready.
All right, good.
Ready. Make sure y'all are live over there.
Exactly,
All
right. Awake.
All right, so my name is Bryant Miller, and I am with Maximum Realtor Partners. I got a guest and colleague of mine, a really good guy, Frantzky Thomas from Homestar Financial, to come in and bless us with this information on what money they can provide you on somebody raising their hand. What money they can provide you in this 2020 quarantine market right now. So, like I said before, we're just going to discuss the 8-step process for home ownership. We're going to discuss the financing options. We're going to discuss how to prepare for home ownership, the local market status, like what's going on in the market right now, what exactly is escrow, and the closing process. So first of the 8 steps is first, choose your friendly favorite real estate agent. Again, my name is Bryant Miller. Just a little bit about myself. I'm under the brokerage of Maximum Realtor Partners. I have my own companies under Maximum Realtor Partners with Bryant Miller Realty Group, where I have a team that services millions of dollars in real estate per year. My educational background, I have a business associates in business management, and then a bachelor's degree in supply chain management. Didn't use those degrees, so I ended up landing into real estate, and I did combine them into one, beastly Bryant Miller. I'm an expert at real estate negotiations, and I am a mentor for the new hire real estate agents that do come through the brokerage, that just getting their license. And then I'm a mentor as well for first-time real estate investors to help them close their first deal. If you want to talk about any of those, getting into real estate, we could talk about that, and later just apply to the email or reply to the email, hey, I'm interested in that. But that's not what this call is for. So very first step, choose Bryant Miller as your realtor. Now, the second step, now, unless you are paying cash for these different properties, you have to get pre-approved through a lender or get pre-approved in order to purchase the house. Unless you have, I mean, if we're looking at a $300,000 house, if you have $300,000 that's laying around, by all means, let's go. But if not, we have to get a lender to get approved in order to get into the house. Now, one of my favorite things is like, hey, not being approved is, if you go look for a house without being approved, it's like going to the grocery store without knowing how much money you have to spend on those groceries. You might get up to the line and be like, oh, you got $400 worth of groceries, but you only got $200 in your bank account right now. So it's just like that. So I'm gonna hand it over to my man Frantzky Thomas. He's gonna go over how to get pre-approved, what are the different qualifications, and then what are the different programs that's out there right now. Even in this market, there's different programs. Things are changing daily, and my man is a beast on the mortgage lending side. So he keeps up with all the different trends and statistics on what's going on in the mortgage industry. So I'm going to hand it over to my man Frantzky Thomas with Homestar Financials.
Thank you, Brian. Thank you. All right. So if you could go to the next slide, please. All right. So as Brian said, I'm Frantzky with Homestar Financial. Graduated from Kennesaw State University, computer science, but then I came into financing. So a couple of things that really matter with financing when you're trying to get a home loan. It's really three things: credit, income, and assets. So originally we used to lend at 580, but come April 1st, we had to switch up the guidelines a little bit. Investors started tightening up. So right now, our minimum required credit score is 620. We're among the lower ones in credit score requirements. A lot of people are 660, 680, even 700. I know Chase, all new clients, they're requiring a minimum of 700, but at Homestar, we're still 620. The next thing is job history, income. So you just need 2 years of job history. It doesn't have to be the same job. As long as you're employed full-time, you'll be good to go. And for those who might not have 2 years of job history, let's just say you graduated from college, as long as whatever you have a job in now was what you majored in college, we definitely can use that for history. Just provide us with transcripts and you'll be good to go. So your nurses, lawyers, any type of, really any job, as long as you majored in it and you're working in it now, we can use that. And as far as your assets, typically minimum required investment of 3.5%. Sometimes it's as low as 3%. Now there is down payment assistance programs available. We used to have a wide variety, 100% financing, no MI products, but temporarily those are suspended due to COVID. But we still have one that we offer. It's called the Georgia Dream Program, minimum required score of 640. There's a couple of certain restrictions that apply, but we can go over that. Now, a couple of the key features for that program is you can get $5,000 in assistance anywhere in Georgia, or you could get $15,000 in Clayton County, DeKalb County, and Fulton County. So that's one of the good areas, or one of the areas that you can get a little bit more money. A couple of things that, like I said, there's some income restrictions. You have to be a first-time home buyer, of course. But with that aside, we do have a bunch of other products that we can still offer for your veterans. We have a VA loan that's 100% financing, very low mortgage payments. You have sometimes you're eligible to get your mortgage insurance, forgiven. And you also have your USDA, that's also 100% financing. I know not everybody wants to live in the city. If you want to move a little bit in the rural areas, the outskirts, you can qualify for 100% financing as well. And your FHA, that's probably the standard. Most people usually fit in that category. Very easy to qualify, 3.5% down. You get a lot of leniency on your debt to income ratio restrictions so you could qualify typically for more of a house. And then last but not least, it's your conventional. Conventionals for the people who usually want to put a little bit more down, maybe 20% down to get rid of mortgage insurance. But at the end of the day, your credit profile is going to be the one that decides, which program fits best for you. And my job is to put you in that program, save you the most amount of money possible. Thank you.
So did have a couple of questions that came in now. If we don't meet the 620, will you give us a game plan to get up to that 620 to get qualified for a home?
Absolutely. So we offer free credit repairs. So right now, I have a good team that helps me. For example, I had another gentleman, started out about a month ago, 608 credit scores. In 1 month, I was able to get him up to 671. And now he's getting a bunch of products available to him. Interest rates are extremely low. So we definitely help and put a game plan. I would say a lot of the times people usually have medical collections. That's one of the easiest things you could get deleted. Sometimes you could go ahead and settle and they'll provide a deletion letter, and it's easy as, just sending me that documentation and I'll go ahead and get it updated on the bureaus. So yes, credit restoration is always an option. I'm willing to work as hard as you're willing to work. So this is, you got to want it bad enough, but yes, those programs are available.
Let's do it. So and me personally, I know somebody's on here right now. They stated that I told them the other day that the Georgia Dream was out because most lenders, not doing it. So, and then another question just came in. I was told that the Georgia Dream was not here anymore, and it is still here. Certain lenders, and that's why I only work with the best lenders because they keep me updated on what's going on in the industry. So Georgia Dream is still around. Only certain mortgage lenders are doing it, and I got him right here on the webinar with us today. So Georgia Dream is still around, guys. So I said, make sure you guys write in any questions down, type in the question answers like, hey, and we'll definitely get to those. We're going a good time, so we may answer a couple of them throughout. If it's something that we're possibly going to answer throughout the presentation, like, hey, we'll get to it right afterwards. So been told that my school student loans. How does that affect your I guess debt to income ratios? What do y'all look at with student loans?
Okay, great question. So different programs look at student loans differently. So I always say the higher the credit scores, the higher availability of programs you have available. So the standard way that you tackle student loans for FHA is you're looking at 1% of the value or the fully amortized payments. So sometimes people are put on income-driven repayment plans. So as long as that payment will satisfy the term of the loan, we can use that. And usually those payments are significantly less than the 1%. So if you don't have that set up, all you have to do is call your servicer and get put on that plan, and we can use that. Now for VA, let's just say anybody's a veteran. You can also use, if the student loans are deferred, as long as it's a year out from the closing date, we don't have to include any of your student loans. So that's another cool thing about VA. Now for conventional. Conventional is a good one as well. If you have an income-driven repayment plan or whatever's listed on the credit report, we can use that. And usually that balance is also less than the 1%. So another thing is USDA. USDA, we're able to use 0.5% of the balance for student loans, whereas FHA is the 1%. We're able to use half of that, and usually that helps people out. So typically, you just want to be able to talk to your servicer and get on the right payment plan for your student loans. And as long as we have documentation, we are able to use that payment plan, and that should minimize your debt to income ratio and allow you to qualify.
Nice, that's good stuff. Man, I said I was gonna wait to the end of questions, but I know. I think
They just keep coming. Mhm.
this is the foundation, for getting into a home. So I'm gonna go with these questions because it's really what's needed. Um, Another one came in. Can we get pre-qualified if we're under 2 years work history?
Okay. So it depends. I don't know if you were here for the beginning of the part. As long as, let's just say you were a college student and you just graduated and you just started working, as long as your field right now was what you studied in school, we can use that as history. Now, let's just say, you didn't go to school. Unfortunately, you would need to have 2 years of history, but it could have been part-time employment. It could have been even, just small job. As long as we can document the time period, we will be able to use that. A lot of people think, if it could have been a nanny job, whatever, as long as we're able to document the history, we should be able to use it. And keep in mind, I guess anonymous, it doesn't have to be the same job. Any other jobs, you could have worked at one job for 6 months, another job for a year, another job for 3 months, and another job for 6. As long as you get a full 2 years, you're good to go. I hope that answered your question.
Awesome. And then, does Georgia Dream require you to stay in a house for a certain amount of time?
Yes. So Georgia Dream, it allows you to stay or you need to stay in the house for 5 years, or you'll just have to pay back the money that was given to you. So the loan, it's a grant forgiven after 5 years. So if you want to move for any reason, you just have to pay the quick $5,000 or 15 back once you sell the property. But if you don't want to pay that back, just stay in the house for 5 years and you'll be good to go.
5 years. Now, the Georgia Dream program is awesome, guys. Actually, I just had a client close that right when the quarantine started, and she actually got a check through us negotiating. She actually got a check back at closing for the different refunds and things that they give us. So Georgia Dream, all these other financial products that Mr. Frantzky Thomas has is awesome. If you could still hear me, drop a link in the chat. And if you got some good knowledge out of Mr. Frantzky Thomas, drop a good thumbs up or something in the chat. So if you're ready, make sure I'm still up. Let's go.
Good.
Good. Everybody good? Anybody have any other questions about the financing before we move forward to the next step?
You're welcome. We're welcome, guys.
Good stuff. All right, so we're gonna go ahead and move to the next round. So now step 3 is actually looking for your dream home. This is where you selected a realtor. We got you in touch with the mortgage company, Mr. Frantzky Thomas, and now with that pre-approval letter that he gives you, we can go out and start looking for your dream home. So first, we shop via online to narrow down your criteria. So we're looking for the different neighborhoods, your city, your area, your beds and bath, etc. What things you really like in a home. Then once we go from there, then we get your next, your top 3 to 5. So via internet, I get a good idea of what you actually like on paper. And so once we out there, you like, hey, I really want a nice size master bedroom, or I really want a good kitchen with something I can have entertainment areas and things of that sort. We're going to narrow all of that down on, a site. I put you into a site where I send you listings for different homes that fit your criteria. And then we narrow it down from there to the best 3 to 5. And then we pick out a time to go check out those different properties. Now, we have to set appointments first. Sometimes people are living in these homes. So the difference between a vacant home and an occupied home is a lot of times it's a lot of investors out here flipping homes. So if they're flipping it, typically it might be vacant. But sometimes people are actually living in the homes with their families, boy, girl, dog, everything. Everybody's living in a home. So we have to get in touch with the seller's agent first in order to schedule an appointment. Sometimes they might, sleep at night and wait and work in the morning at home. Or sometimes they might work during the day and then from home, and can't leave. So we have to schedule an appointment to actually view the property. And then from there, we will visit the home. So once they approve it, I have to go through a system and I map out so it's easy for everybody. So I end up mapping out from the homes that we selected, map out like on MapQuest or something, a easiest route so we can hit one house, two house, so you won't be wasting gas, and nor will we be wasting time because the market is really hot. So we got to get out to these properties fast as possible because there's multiple offers on most of the houses nowadays. So we'll visit the property. Once we like the property, we'll actually place a bid on the property. And that will lead us to step 4. Once you actually go under contract, you will need what we call earnest money, and it will be in the due diligence period, depending on what we put on the contract. So earnest money, what is earnest money, guys? Earnest money is for liquidated damages. That's the actual term for it, but earnest money just sounds better. So pretty much in order to take a seller's house off the market and let them know that you're serious, you have to put up earnest money. Typically, this ranges, depending on the price point, it ranges from anywhere from $1,000 up to $3,000. If you get into the $1 million homes, you might be putting $100,000 down. Just depends. Once you get in that area, typically they have you put 1% down. But let's just say $1,000 to $3,000, depending on the seller. Now, once you put up the earnest money, it lets the seller know that, hey, I'm serious about purchasing this home, and if you accept my offer, you cannot market this property to anybody else to see it. So with them not being able to market their property, they're not allowed to sell it to anybody else at that time. So that's what earnest money is for. So that's typically, like I said, $1,000 to $3,000, depending. We're always going to start on the low side, and sometimes they might negotiate back, but me as being your realtor, I'm always going to start off on the low side. Next, you have to, while we're under due diligence, let's just explain what due diligence is. So due diligence is a period of time where you will be able to inspect the home. I had a client that had a police officer friend. He did a market research on what's the crime areas on that particular area and that property. So you can do anything you want to do. Google is your best friend. You can find all kind of stuff on Google. So this is a time that you will be able to inspect the property. So I suggest, you don't have to, but I suggest you get a home inspector. And what they'll do, they'll give you like a 60 to 70 page list of what's right and what's wrong with the property. Once we get this, and Frantzky cannot see this list because he's providing the money, so typically he won't even see this. This will be between me and you. Now the inspector, like I say, he's gonna give you a 60, 70 page list of what's right and what's wrong with the property. We're really looking for those big ticket items like the roof, the HVAC, the plumbing, the electrical. They'll inspect all of that. Once you get that information, the inspector is gonna send it back to me. And then me and you are gonna go through it like, hey, what do you want to ask the seller for? Typically, I would, we'll run a list of, hey, I think if it's a light switch that's turned upside down, like, hey, that's something we could fix. We're not looking for things like that. We're looking for, like I said, those bigger ticket items. So of course, once we figure out what we want to ask the seller, then we will go into stating, hey, let's go ahead and send an amendment over, hey, fix, repair, or replace any of these items on the list. Sometimes they're like, hey, yeah, we want, and it all depends on the seller. Sometimes they will be like, yeah, we'll fix it. Hey, we'll just get some money because we don't feel like dealing with it, or no, we're not going to fix it at all. And then we'll make a decision based off, we'll negotiate based off what we say and what you think you could do and what you think they could do. So, and then there's this due diligence period. You have, once you take out the property, say we don't come to an agreement, then we will be able to, of course, get out of that loan or get out of that contract, saying, hey, we couldn't come to agreement on these repairs. Please let me get my earnest money back. And the earnest money will be turned into the broker. So long as we're within the due diligence periods and everything is in good standing, then we're more than likely will get the earnest money back. If we go outside of that due diligence period, then it's a little harder to get the earnest money back because you're outside of the contract that you agreed to. So more than likely, if we go outside of that and you be like, hey, I like, Sarah's house down the street, it looks a lot nicer, but you're outside of that due diligence period, for taking that seller's home off of the market, that seller will be able to get your earnest money because you didn't come to agreements with the terms of the contract. But thankful, we have a team in place to let you know when all of these dates are in place. I have a contract coordinator, and we will give you a date step by step. Hey, this is when we went under contract. This is when, we got the due diligence period. This is when due diligence end, and all so forth and so on. So, any questions on that part? Y'all still here? Drop some thumbs up in the chat. Thumbs up in the chat. Any questions on earnest money and due diligence period? Good stuff, good stuff, good stuff.
We have one come in about how long is the due diligence period.
Oh, great question, great question. So the due diligence period is all negotiable. So typically I do between 7 to 10 days on residential. On commercial, I do a lot more because you have to do a lot more studying, but we're going to stick to the residential side right now. So typically between 7 to 10 days, I will do a due diligence period. It only takes really about 3 days, but in order to, different negotiation strategies that I do, I kind of prolong it a little more. Now, if it's a multiple offer situation in which we're doing today, most agents are doing, 10, 11, 12 due diligence period days. With the inspectors and the team that I have, we could put 7 days, we'll be done in 3 days, and then it looks a lot better on the selling side. Like, all right, they in and out, they know what they want, they like it, but we just, we're prepared for to move quickly. So anywhere between 7 to 10 when I write up the contract, and that depends on how many offers is on the property. I think a couple other came in. How long due diligence period? How long is due diligence period? Okay, so most of cool. Any other questions on that before we move forward? No. All right. So after the due diligence period, we have this thing called the appraisal, and this is where we're pretty much the appraisal is letting you know what the house is valued at, and this goes back once we're out of the due diligence period. Then you'll be working close hands with Mr. Frantzky Thomas and his team to get you, get that final stuff taken care of. So I'm gonna let him take it over real quick for the.
All right. All right. So like Bryant said, the appraisal usually falls back on us. So we want to make sure that you are getting a good investment. We will only loan up to the appraised value. So anything that comes under value, we're going to either have to renegotiate, and that's when Bryant is going to, talk to the seller and say, hey, this is what the appraisal feels like your house is worth. You can go ahead and just drop down the purchase price, and then we'll make that. Now, in rare situations where they don't want to appraise or they don't want to drop down the purchase price, and we're right there, a buyer could make up the difference if they really, really, really love the home. If it's an urgent situation, they got to get into the home, it could possibly make up the difference. But on the lending side, now there's another thing that we could do. We could also contest the appraisal. I've had a couple of success stories with that, where the appraisal comes back a little bit undervalued, but my realtor and I, we go ahead and send in some more comps, and then we get that appraisal back, and so we can proceed with the process. So it's really tell you what the value of the home is, and sometimes you might get a good property where it already has equity in there. So let's just say you're buying a house for $200,000, and it appraises for $215,000. Right then, you already have $15,000 in equity in that property. So, that means that you're getting the house at a good deal. The house's value And always you can, this is a little bit more, out of the range, but, Bryant, I'm sure can enlighten that a little bit more. But, you could also put some forced appreciation, you know, by renovating the property. But this is a good info when you want to, let's just say down the line, refinance. You already, you had that extra 15,000 in equity, and you can do a little bit of you have some wiggle room, But so that's a couple of things with the appraisal. Just making sure that the house is valuated. There's a good thing too is the appraisers, they note some repairs. It's not as thorough as an inspector, but the property does have to meet some minimum requirements. It needs to have, for FHA, it's one of the more stringent ones. It has to have, heating and air, let's see, a kitchen, has to have that. But for conventionals, they're a little bit more lenient. You could buy a property that needs a little bit of work, just to get, let's just say it's going to be an investment. So FHA is a little bit more strict, but conventional, you're a little bit more lenient on the appraisal. Any questions with appraisals?
So that's good. I do want to, I guess, reiterate a few, I had a little echo, a few things on the appraisal. So like the appraisal, I always give my client 3 options. I've had many of these happen as well. So you have 3 options if the houses do not appraise. That first option is, the seller will bring the price down. So say for instance that $200,000, we went under contract for we went under contract for 205. So the lender is only going to pay, that 200,000 that it appraised for, that the appraiser comes back at. So if that's the case, then either the seller could bring the price down of that 200,000 to 200,000, or the buyer can come with the extra money for that $5,000 difference, or they can meet someone there, or they can back out and still, get that earnest money back that we talked about a little bit earlier. It's a better chance to get the earnest money back because we couldn't come to an agreement. Question run and Lauren asking. Perfect. See, I told you I'd do this, man. Awesome. Any other question? Now, it's a good chance you would get your earnest money back. It's not 100%, but we fighting everything we can to get that earnest money back because we couldn't come to an agreement. Actually, just happened not too long ago. Awesome. Any other questions?
All right.
Awesome. So gonna move on to step 6 in this process.
All right. So we're about 75 to 85% almost done with the process. So typically the underwriter would have assigned some conditions for us to clear. So my processor and assistant are working on these conditions, making sure it could range from a number of things. It could just making sure that the title work is complete. Title work is, making sure that there aren't any encumbrances on the property, liens, any type of judgments, anything like that. So we want to make sure that you're getting a good sound investment. Usually the more documentation that we collect up front, the cleaner the file is going to come out of underwriting. So usually I try and ask, for everything. I know certain people, they might not be able to get it right this instant, but I try and give everybody a 48-hour just so we're working fast. So the more documentation, the cleaner the file is going to come out. And once we get everything collected, we send the file back into underwriting for the final review. And then we get our clear to close, also known as the final approval. And you're good to go. Your loan has been fully approved. The next step is just, actually, you want to go to the next slide?
Yeah.
I think there's one slide after that.
No.
Yeah. Okay. So yeah, once we get the loan approved, we're going to go ahead, start working on wiring the attorney. And then this is when Bryant comes back into play. But my job is done. You guys are happy. You get to breathe. And then Bryant is going to go ahead and take over the rest and get the closing scheduled.
Yes, indeed. So that clear to close word is music to everybody's ears. So when you hear that clear to close, you're gonna keep doing what you. Oh, let's do some things. What not to do. Finance.
Good,
I need to
good.
put these in here. What should you not be doing when in qualification for getting into a home? I just throw
All
some
right.
things out there.
All right, let's go. So you
But
don't want to be spending your money. Yeah, let's during this time period, right? You don't want to be spending the money that you have saved up. You know, I've had some people, you know, they come to me with $8,000, $9,000. I get updated bank statements and they have $3,000. Where are you gonna close? You know, what are you gonna use to close your money? You also don't want to, apply for anybody. You want to get any financing. You don't want to switch jobs. You know, these are all things that can jeopardize the loan and delay the process and, you know, put your earnest money at risk. So don't co-sign, don't spend your money, don't, switch your jobs. There's a couple of other things, but, you know, usually I try and let everybody know at the beginning of the process, hey, don't do these things. So I appreciate you for bringing that up, Bryant.
yeah, man. I'll always take it apart to tell my clients in my consultations, like, hey, one of my clients, they ended up going out and getting qualified for some furniture the day before because they wanted some furniture for the house to move in and things of that sort. And they financed the furniture through this company. Let's just say they're not in the home because they couldn't qualify for it because they had them run their credit. So just like, if I know you're gonna be out there looking for different furniture stores, hey, I want the house to look like this, but just don't let anybody run your credit or anything because it will jeopardize you getting, because they're gonna pull another credit check. What is it, 2 to 3 days before?
Yeah, so for conventional, we do a refresh report right the day of closing, right when we're getting the CTC. So we'll see we'll see any new things that happen. FHA, you know, they don't really do credit checks like that, but, you know, it's just good practice to not do anything like that. In the event, let's just say we had to switch programs, you know, some things happen in the process. You might have to switch. So it's just best practice to not apply for anything or get your credit ran.
Right. Pretty much live under a rock until you get in here, till you get closed on the house. Go to work, come back home. Go to work, come back home.
Save your money.
Also, we had a question roll in. Can I stay PRN on current job and then get another full-time job? So they're are in a nursing field on a current job and you want to get another full-time job. I think that'll be it'll look better.
Okay, so PRN, you said that, yeah, okay. So
I
for
think that's
nursing,
yeah, that's
yeah. So you're saying that you want to have two jobs because is that correct? Like just trying to get a second job or another full-time job? So I think I get what you're trying to say.
Yeah.
When if you want to use two jobs to finance the FHA, you need a 2-year history of working both jobs. Because, you know, usually 2 years is a good average to see the sustainability. So, you know, you could qualify for 2 jobs and realize that you can't work, you know, both jobs at the same time. So they want to see a 2-year history if you're going to qualify for 2 jobs. So let's just say you have a full-time job and a part-time job. As long as you've been working both jobs simultaneously for 2 years, then we could go ahead and use it. Other than that, then yeah, we'll just qualify off the full-time one. And then we had okay, does being furlough affect the loan even if you're a co-signer? So,
The question is, if furlough affect the loan even if you're the co-signer?
yes, absolutely. So we will verify. Right now, we have a COVID-19 condition, and we verify everybody that's on the loan. So even if you're a co-signer, because you still have a liability to that loan, so we want to make sure that you're still employed. Now I know certain people are, you know, with the economy opening back up, certain people are probably opening back to work. As long as your verification of employment states that you're able to, you're back at work and your hours haven't changed, then yeah, we'll be good to go. Let's see. So we had a couple other questions come through.
All right, so I asked them, I allowed so everybody can hear them because someone.
Yep.
So how long does your pre-approval last? Is one question.
So your pre-approval lasts for 120 days, 4 months. That's how good your credit report is. So as long as you got approved originally, and we passed that 4 months, we would just pull a new report, make sure that everything is still, good, and then we can continue the process again.
Perfect, perfect. And if you receive child support, that is not court mandated, can that be counted?
For the child support, it has to be court ordered. And we used to have a little bit of leeway with that, with different bank statement products and stuff like that to show the cash flow coming in. But right now, we're not able to do that. So yes, it would have to be court ordered. We have to be able to document it. And the continuance, that's a big thing too. It has to continue for another at least 3 years.
Okay. Good
Yep.
stuff, good stuff. Another question came in. What if I have a part-time job, but if you have been laid off and want to use that income, can you use that income?
Part-time job and laid off. Well, no, we won't be able to use it because, you're currently not working. So we would have to either, be able to get that part-time job and be back. Depending on what line of work it is, you'd have to, get a new part-time job. And then we'll be able to use it at least 30 days at the job. So to answer your question, no, just because you aren't employed anymore at the time.
Awesome. So moving right along, I think no other questions came in. Does your score increase? One more came in. If your score increases within that 120 days, can new scores be worked in? Good stuff.
Yes, absolutely. So let's just say we're still working on our credit score. You paid off some stuff down, you opened some new credit, and it increases, things get deleted. Yeah, I'll just go ahead and pull the new updated report, and we can use that. And that way, all the even better, because higher credit score, better rate, higher chance of more approval. So yeah, we can use the new one.
Awesome. All right, so just finished that, step 6, the final condition, got that clear to close. Now we just confirm the date with the closing attorney that we put on the first date when we first wrote that offer. And so they'll be asking for things like, what's your buyer information sheet? That's just your criteria. So the lender knows, not the lender, the attorney knows who you are and who they're servicing that day. You'll be wiring any funds that's needed. So you'll get some funds, the
final CD.
Yeah, the final CD.
Final closing disclosure, I'll provide that to you, let you know what the exact number is. In the event that there's any type of changes, it's always nice to bring either wire a little bit over or bring a checkbook. And sometimes, you might wire, the numbers might actually come down if you wire a little bit earlier, and you could get a check back at closing.
Yep. I always tell my clients to wire over so you'll be getting a check, because I had one client one time, and it only takes one for me. They put a little bit under, and they had to go to the closing. They can't take cash, so they had to leave the closing, go to the bank. It was just a mess. So I was like, hey, I'd rather you get a check back at closing. They're gonna cut you a check back at closing. Get the check back at closing. You walk away with a check, and everything's good. So yeah, good stuff. And then the items for the closing, you just need 2 forms of ID. Dress comfortable, dress however you want, and then of course yourself and whoever's on that loan to do the signing. All right, and then step 8 is take pictures and get your keys. It's a couple of our closings, most recent closings. You get your keys, and you actually would create a homeowner at this point. And yeah, congratulations. So is there any other questions that we did not answer during this webinar at this point. Let's see. You can either type them in the chat, or you can raise your hands, or whatever you want to do. This is it. This is your time, David. Let me get some thumbs up. You're still there.
Questions, bring the
Thumbs up.
questions. Thank you.
Some thumbs up. Y'all still there? It's gift card time. Thumbs up. Anybody ready to get into their new home?
Exactly. Guys, drop down your time for yeah, never mind. You guys don't have to do that because it mentioned that in the sign up, the registration. Okay, we got a question. Retirement income. How does retirement income work? So we can use retirement income, Social Security, pensions, all of that. As long as it's documentable, whether it's monthly, bi-monthly, we'll just qualify as regular income. So provide the documentation, state the frequency, and we'll be able to use it to qualify you. So pensions, Social Security, disability, all things like that we can use for income.
Awesome. This check back at closing. Are you referring to my client that got a check back at closing for the Georgia Dream? This check back at closing. Tell me more about that. Okay. So the way we negotiated, we had a Georgia Dream. She got approved for Georgia Dream $15,000. And so the way we negotiated, we was able to give them, all the closing costs. She would still be able to not pay any closing costs or down payment assistance. Because they provide the down payment assistance. So with all that money, I think you get they reimburse you for something on Georgia Dream.
Yes. So you can get your earnest money back and your appraisal. So depending on how much you put in earnest money, you can get that back and your appraisal. But you can't, sometimes your documents might show the lenders would have finalized it by then, but you can't get negative $5,000 back. You can't get that much money back. Just your appraisal and your earnest money.
Appraisal, earnest money, and stuff. So if you end up signing the house, what happens to the earnest money? Does it get towards the house? Perfect question. So yeah.
Yes. So your earnest money, it goes towards your down payment. So you get credit for that. So let's just say your down payment is $6,000 and you put $1,000 earnest money. What you will be left to wire to the closing attorney is only $5,000.
Awesome. I have a 730. Would I be able to get people to increase with credit repair? So you have.
Yeah, absolutely. So usually when I pull the credit report, they show score increase potential. So I would go ahead and take a look at that and see what I can get you to 730, 750, 760. Just see. But yeah, no matter what the score is, we'll definitely try to increase it because at the end of the day, the higher the score, the better pricing, the better programs, the likelihood of an approval. So.
Awesome. Our next question is, if you had owned a home before, can you qualify for Georgia Dream?
Yes. So the phrase first-time home buyer derives from if you haven't owned a home within the last 3 years. So if you sold your property back in 2015, 2016, yeah, you can go ahead and purchase using Georgia Dream as long as it's been within 3 years. Now, another thing to keep in mind is you can't be a co-signer because you still have ownership, or you can't be on title, because you have ownership interest in another property. So if you do have that, you won't be able to qualify. Or if you have any mortgage interest deducted from your tax returns, you won't be able to qualify as well. But yes, you can use Georgia Dream if you have owned a home way back.
So our next question is, in what counties is Georgia Dream available?
So Georgia Dream, you can purchase anywhere in the state of Georgia, and you're able to get $5,000. But the ones that I mentioned, Clayton, DeKalb, and Fulton, and there's Bibb, or not Bibb, excuse me, Muskogee, and there's a couple of ones in like way South Georgia. I think there's like one or two more. But those you can also get $15,000 as well. But the main one, in that Atlanta area, Fulton, DeKalb, and Clayton, you can get 15,000. Anywhere else, you can get 5,000. Tara, you asked, what is with the Georgia Dream, do you have to have a perfect score? No. So the minimum required credit score for Georgia Dream is 640. So they have different tiers for different debt to income ratio restrictions for Georgia Dream. So 640 to 659, that's one tier. 660 and to 699, that's another tier, and 700 and above. So your debt to income ratio restrictions is basically your income plus your debt plus the house, all together. That's when you factor in what your debt to income ratio is. So I'll go ahead and make sure that you're in the right program. But yes, 640 is the minimum score for Georgia.
Awesome. Now to add to that question, is there a certain amount of money that I make per year that I can qualify for Georgia Dream?
Yes. So I don't know all the counties off the top of my head because it's like 15, 20 counties. But anything that's kind of, like in the perimeter and just kind of more rural, one to two people in the house, the income limit is 74,500, and if it's 1 to 3, it's 84,500. So that's the income limit for Georgia Dream.
So, next question is, what is closing costs? You may take that, or you got it.
You could go ahead. I feel like I've spoken for a bit. So
all right. So closing costs, there's two different things: closing costs and down payment assistance. And actually, I forgot appraisal too. I'm gonna get into that next. But closing costs, back in like the 2008 when they had all those different amortization things, the adjustable rate mortgage. You have closing costs, which is, I think FHA is 3.5%. You have to put 3.5% down no, that's down payment, sorry. So down payment, I'm just gonna say that. Down payment is 3.5%. Closing costs is for like the attorney fees, the filing fees, all these different fees for the attorneys.
Recording fees.
It's so many, it's different fees that the lender does. And so once you get those fees, it's typically 3% of the purchase price. And so if you're at a 180, I'm gonna bring a calculator out real quick. So if you're at 180 times 0.03, that's 5,400 in closing costs. Now, that's all negotiable. So when we negotiate the process in the beginning with the sellers, we try to get as much as that 3% from them as possible. So you only have your down payment to pay left. But if you're getting that Georgia Dream, of course, it'll take that 15,000. It'll take care of both of it. Or even if you're getting the 5,000, it could take care of that. That most of that you have to come up with $400, and we're still probably, we get more than that. So you won't have to come back with anything. So that's closing costs. Down payment is that 3%. They used to have the 3% conventional, but during the quarantine, I think that's gone, right?
No, we're still doing that. We're still doing the 3% down.
Oh, that's perfect. So the 3% conventional, and I always would recommend that conventional loan because first of all, the appraisal is a little more lenient. Second of all, the PMI, as you discussed earlier, once you get to like that 20% range, the PMI falls off, right? Yeah. And then it's still less than the FHA.
You're putting, correct.
So the conventional route would definitely be the better route once you, because your mortgage will end up being lower once you get to that 20% mark. Freaking awesome. And then the appraisal cost, that's one more cost. We talked about the due diligence cost, the earnest money cost and appraisal cost is typically what, between
450, usually 450. Sometimes condos might be like 500,
Right.
but typically 450 to 500. And if you're in, you want to close quickly, whatever the reason may be, you can do a rush, $100 more to get the appraisal back as soon as possible.
Awesome, awesome. Well, I think we definitely if
Any
there are
more
any
questions, keep them
questions,
coming. We probably could give them another 5 to 10 minutes, I'd say.
yeah,
So,
any other questions, comments, concerns? Who's ready? Who's ready to go ahead and get approved or get their credit looked at? Even if you're not ready to be approved, we can still help you out on that end. Because we do credit analyzer.
Credit analyzer, simulator. We can take a look at it all.
Other questions?
Any questions?
Outside of the VA loan, are there any other military benefits?
Let's see. Outside of the VA loan, right now we try and do a. We usually try and pay for the appraisal for VA. So, and we can get up to $500 lender credit. But other than that, no, that's usually what we offer. Now, Georgia Dream, it's not necessarily military, but they have another program to where you can get a little bit extra money. It's called the PEN program. If you're, a first responder, teacher, a nurse, you can get up to $7,500. But Rodrigo, to answer your question, we can probably pay for the appraisal, $450, and that's covered. So really, all you'll be left paying is your earnest money.
Perfect. Any other questions? If y'all get value out of this, put a thumbs up in the chat. Thumbs up.
Okay, we got another question. When you pull the credit reports, is it a hard inquiry? How many points have you seen a credit score drop from doing so? So that's a very good question. I get this a lot. So a mortgage inquiry is not treated like a credit card or an auto loan. So I usually don't see a drop at all. And if usually people come to me and telling me, hey, my credit score is, 650 on Credit Karma, you see Credit Karma is not the most accurate thing. So you might get, oh, my credit score dropped, 20 points on Credit Karma. Credit Karma is just wildly inaccurate. So typically, I've even seen it go up, when I pulled it. 2 days ago, I pulled somebody's credit report. They said they had a 645 on Credit Karma. I pulled it. Their score was a 730. So that's just such a wild gap, But typically, it is an inquiry, but it's not treated like a credit card because you're extending for a line of credit. Something that's unsecured is obviously going to have more of an impact than a mortgage where it's an installment loan.
So another question came in. What are the costs for inspection and appraisals? So inspection, you can look, depending on the size of the house, you can look between $350 and $750. They base it off of square footage, and then appraisal is between $450
to $500.
Yeah, $450 to $500, depending on the size of the house as well, and what the appraisal has to do. Awesome. So in order to get any other questions? Let's see, some other people still rolling in. Everybody good? Your thumbs up if you're good. Thumbs up. Good stuff. Look like everybody good. Awesome. Well, me and Frantzky, I'm gonna stop sharing my screen real quick. I don't even know if I can. Thumbs up. Boom. Y'all don't see my screen. All right.
Perfect.
Awesome, man. Of course.
I appreciate everybody coming out. Yeah.
We want to thank you for coming out and attending our first annual, our first monthly,
Monthly
uh, will be,
webinar.
it might even make it weekly, webinar. Definitely tell your friends and family what, I clearly don't know where to throw the, oh goodness, just put a smile in the chat, smile in the chat. Definitely gonna make this a point to do this all the time now. Awesome, thank you. Tell your fans, family, hey, what value you
Co-workers.
got out of this. How do you get in contact with us? Send you an email. I'll just be reaching out to you guys over the next couple of weeks to see if you're ready to get this thing going. We're still closing houses. A lot of people are really coming like, hey, are people still closing houses in the quarantine? Are people still looking? We are. I look at the market daily, and 83 houses went on the market in my particular areas that we look at yesterday. So we're still getting approved. We got the lenders, got the programs. We have everything you need. Home inspectors, appraisers, closing attorneys. We have the best teams. We both manage teams, so your paperwork will be in order. Reach out to me or Mr. Frantzky. Let them know that you went through the home buyer webinar. We'll take definitely great care of you.
Absolutely.
You have anything else to say, Mr. Frantzky?
No, yeah. So everybody, if they just want to go ahead and speak, like Brian said, just reach out to us. We can go ahead and get the application process started, see where you stand, see where you can be, put you on a plan. We'll just take care of you. And if not, I always say this, if it's never a no, it's just a not right now type of thing. So we'll get you ready for down the line.
Indeed, indeed, indeed. Well, awesome, guys. As far as the $100 gift card, we're gonna do a raffle, right? So everything. I'll take a note of all the names that was in here. We're gonna do a raffle, and we'll probably You want to go live?
Yeah. So we could go live, and then you guys can see how we draw, and then whoever picks out, we'll reach out to you. It's going to be a digital, so we'll just send it to your email that was provided, and we'll go from there.
Make sure you put your best email in here, because that's how you'll be receiving the money. So if you didn't put your best email, just shoot me an email, and we'll go from there. Well, awesome, man. Thank you guys so much. So grateful to have you spend an hour with us, 10 minutes with us today. Again, Bryant Miller with Bryant Miller Realty Group and Mr. Frantzky Thomas. You can reach out with Homestar Financials. And y'all make it the best day ever, and we will talk to you soon.
Stay safe out there. Thanks, y'all.
All right, thanks, guys.